Good afternoon, good evening. Welcome to Traders Workshop. I'll be your host, Tom Schneider, CMT with NinjaTrader. Traders Workshop, where we like to bring in our NinjaTrader ecosystem experts to talk about what's happening in the market. We've got a great guest today. Before we jump to that, though, what we're going to talk about is a little bit of housekeeping. Just want to remind everybody that futures and options trading contains substantial risk, not for every trader. You could potentially lose all or even more than all of your initial investments. So that's why we recommend you use risk capital. What is risk capital? It's money that you can afford to lose, doesn't keep you up at night, doesn't extend your retirement horizon. I also want to remind everybody that past performance is not necessarily indicative of future results, and that what we'll talk about here in this program contains neither trade recommendations nor financial advice, but should be taken for educational purposes only. And with that, it's my pleasure to welcome back to Traders Workshop, Gavin Holmes from Trade Guider. How are you doing, Gavin?
Tom, I'm absolutely fine. Yeah, really looking forward to today. We've had, if you wanted one day to be doing this event with NinjaTrader, it would be today. We are truly blessed. The smart money have been incredibly active on the news today. I was trading this morning. I was doing a mentorship course with a gentleman, and he was going to take a trade before the news. I said, "You don't want to do that." And then after it happened, he went, "Oh, thank goodness I didn't take that trade." I said, "But we could see what was going to happen." I mean, it was fairly obvious on a chart. And so, yeah, we've got some really, I've got some really good charts to finish off with here today once we've covered a little bit of the basics. But yeah, I got more trade alerts this morning when it happened, or when the market opened, than I've ever had for the last several months. Just kept going off, as you'll see. Yeah,
right. And Jim and I talk about not trading ahead of big news, right? When there's big news events, you know what's happening. There are news reports coming out all the time, but there are certain ones that are going to be big. You don't maybe know the direction. You don't know what's going to happen in the news events. Jim and I were talking yesterday about, we thought, kind of behind the scenes, behind the shows, we're talking about, maybe the number is going to come in a little better. What'll happen? Well, we didn't really consider the other part. We just kind of figured, okay, it's going to go the other way. Boy, it did. And, I agree. But, first of all, before we get into the charts, Gavin, I just want to remind everybody who maybe didn't see your first appearance on Traders Workshop. Can you just give a little bit of refresher of yourself, how you got into the business, where you're located, kind of a little bit of background?
Sure. So I started my career as a police officer with the Metropolitan Police. You can tell I'm English. I'm based in the New Forest National Park, which is on the very far tip of the south coast of England. And when I left the police, I was injured on duty. I started my first business, which was initially in the exhibition design business, and then it went into the internet. And long story short, because we haven't got a lot of time, I met the author of this book. Okay, and his name is Tom Williams, and unfortunately now he's passed away. You can probably see a picture of Tom there on the back, and he passed away. I was with him in 2016, and he was a former syndicate trader. Some people call them inside traders. I don't like that word, but he had developed a trading method on a computer which was based on the Richard Wyckoff method of trading and investing, which is becoming more and more popular around the world right now. And lots of people are popping up trying to teach this stuff, but I've been doing this for 22 years. And I decided to buy the company, which I did with my business partner. And I journeyed to Chicago, which is how I met Jim Cagnina, who's in the room here. And I was supposed to be there for 3 months to open the trading office, because we decided that we were going to invest money in this business. And I knew nothing about trading, absolutely nothing. I'm not a financial major, nothing like that. I was literally a layman to this, but Tom had told me, "I will teach you. I will show you how the charts show you the footprint or the elephant in the room," which we've seen today. Perfect day for this. And I learned volume spread analysis, which is what I'm going to show you today. And I also learned, as Tom told me, he says, "Do you know the markets can be rigged?" I said, "No, they can't. We've got the FSA, we've got all the authorities. They wouldn't allow that." But of course, as I'm going to show you, there was a really good book written by Michael Lewis called Flash Boys, which talks all about this. And in my book, I've written two. I'm in the process of the third. It's called Trading in the Shadow of the Smart Money. And in the NinjaTrader platform today, I'm going to show you what exactly I mean, because there is some big opportunities if you know what to look for. And again, I will echo what Tom said there. Don't trade with capital that you cannot afford to risk, because these markets can be very volatile. And today I was doing a mentorship course, and I said to this gentleman, do not take the trade prior to the news, you'll get stopped out. So what we're going to focus on today is the Wyckoff Method, and then looking at the actual NinjaTrader platform where we plug in, we're an ecosystem member, as you probably just heard, and we'll show you some actual setups that I use, so you've got something to take away. And for those of you that would like to read my first book, which explains all of this in a lot more detail, there's a PDF download available with my compliments, and I'll show you where to get that at the end.
Great. That's awesome. Maybe we just jump right into the basics, or the fundamentals, I should say, of the Wyckoff method as it's known. Kind of how that, because I think you need to know that before we understand, like, especially what happened today.
Yeah, I will come to that. Just very quickly, on my screen over here, I've actually got the procession, the Queen's coffin, going down towards the airport. And I just want to say, on behalf of everyone, I'm sure at NinjaTrader and Trade Guider, our sincere condolences go out to all the members of the royal family at the moment, who must be going through a very difficult time. Obviously, it was a great shock to every single person in this country. It still is. There's tens of thousands of people I could see there that are on this, lining the streets, throwing flowers. It's a very momentous occasion for the United Kingdom, and indeed from everyone around the world who sent their condolences. So I thought I'd just throw that in there.
Gavin, I'd just like to just really quick point out, the last time we talked, we were talking about a jubilee, right? I think it was 70 years, right? And how things changed so fast. She oversaw the new prime minister swearing in the ceremony earlier last week. It came as a surprise to all of us. And, I think I could speak for Jim and myself and Jason, Mark, we extend our condolences as well.
Thank you. Yeah, I know that most people around the world have sent so many kind words towards the royal family. It's amazing. So let's get to this, because we are limited for time. So let's start with volume spread analysis. Now, it's based on a method that was taught back in the 1900s. Now, you might think, well, that's not relevant today, but I can tell you it's completely relevant, even more relevant today. Now, I'm going to talk about this book here today, and it's called The Magazine of Wall Street. And it was, at its height, had 250,000 subscribers back in 1907 and 1908. This particular version of the Magazine of Wall Street is dated August the 3rd, 1918. And this was obviously 10 years before the Great Depression. But there's a really great article in here, and I'm going to be talking a little bit about it as I show you the charts. And it says here, you may be able to see it, it says how to become an insider. Okay, how to become an insider. And it's common sense suggestions for the specvester, as they called them then. And it's written by Richard Wyckoff. Now, Wyckoff was a legend in his day as a trader. He was up there with Otto Kahn, JP Morgan, very famous trader. And he wrote about the bucket shops. And he wrote about the markets being rigged, market manipulation. My book talks about exactly the same thing as his book did. It's almost a mirror image, as does Tom's book, The Undeclared Secrets That Drive the Stock Market. And this was the book that started me on my journey and into professional trading. And I'm an investment manager for Wyckoff Williams Portfolio, which is based in Gibraltar. So I don't just trade my own account, I trade other people's money. And what I learned very quickly is the markets are not what they seem. Now, I'm not going to play this video, we don't have time, but this is the late Tom Williams. And if we look at and you can go to this website, and this is where you can download my book, it's volumespreadanalysis.com. And we look at history, and we look at the players in history, and we go back to Tom, Wyckoff, Jesse Livermore, Richard Ney. Now, Richard Ney is an interesting character because he was an actor who lost a lot of money in the markets, and he wrote that book. And I've actually got a signed copy of this in mint condition. And it's called The Wall Street Gang. And it's exactly what is in this book and these magazines is confirmed in there. It's confirmed in here, and it's confirmed in Trading in the Shadow of the Smart Money, which is the name of my book. Now, how can it possibly be that the markets move the way they do? Well, I'll show you very quickly, and then I'll go back to Tom. We've got a story to tell you here. This is exactly what happened to me. And there's an interview with Tom, by the way, which talks about this. But I was at MIT, the Massachusetts Institute of Technology, in 2010, at the height of the BP oil spill. This is the actual monthly chart of BP. The day before my presentation to the Boston Traders Group, I was told by Tom, he rang me that night. He said, Gavin, we've got to buy BP. They're buying BP. I said, who are? He said, the big players are buying it. I said, come on, Tom, I can't go into an event like that and say that BP's a potential buy. I'll look stupid. Gavin, do you trust the method? He said, look at the daily chart yesterday. We've got bag holding. And I said, by the way, that's a very strong signal. And I said, oh my goodness, we have. Anyway, long story short, the end of the seminar, I was asked, which particular stocks you interested in? I said, at the moment, we're looking to buy British Petroleum. Everyone fell about laughing. They thought it was hilarious. But this is the actual chart. It's what happened. It came down. They said, we can't cap the well at the end of the month. It closed off the low of the bar. But look at the volume. That's what we're interested in. It's the activity of the smart money. The next month, it shoots up. All the people who'd sold down here went, what the hell happened? At the 10-year low, by the way. There's no accidents in the markets. They're perfectly predictable if you know what to look for. And then it goes and doubles in value over the next 6 months. This is what volume spread analysis is all about. And this is what I teach. And this is why we work with great people like NinjaTrader, because we're showing you a method that very few traders understand. Most traders will understand a technical analysis tool or a candlestick and that. But it is said that many retail traders struggle to make it in the markets. Well, our mission, and I know it's the same for NinjaTrader, is to make you a successful trader by understanding 3 universal laws. And they are supply and demand, which is on the chart, cause and effect, effort versus result. Understand those 3 things and combine it with the 4th law, which is belief, which I call the law of attraction. You believe in yourself, you communicate that, and you believe you're going to make money. You start your day trading in a positive way. You do that, you can try and avoid the mistakes. Will you lose trades? Absolutely, I do. But I don't take it personally. So that, Tom, is a summary, really, where what volume spread analysis and the Wyckoff method is. And we can show it today on some wonderful charts that are in NinjaTrader, which, I mean, I've got one of crude oil, which is about as obvious as it gets. And then you can all see that as well.
Yeah, I mean, I'd love to get to the charts. One thing I do want to reinforce, of course, is with technical analysis, it's not just price analysis, it's also volume analysis. And I do agree that volume analysis gets tremendously overlooked. We do focus on, and I'm guilty of it. I know others are guilty of it. You focus on levels, you focus on prices, you focus on trends, but you would be doing yourself a disservice if you ignore the volume analysis. And I know with what you're going to show, it's going to be very common sense, very specific volume analysis, but volume analysis overall is ignored, I think, to your detriment. You're right. Nothing's 100%. You're going to have losing trades, but to ignore the volume, to ignore the sentiment, to ignore where activity is happening, you're missing at least half the picture.
Well, volume is activity. You just mentioned that. And that's I've got a sticky note right on there. Remember, Gavin, volume is activity. That's what I've there. So volume is activity. And I've brought this with me today, which is to read from just briefly. It was Tom's, this is 30 years old now. So our company is 35 years old, because if you take Genie Software, which that was the name of the original company, Genie Software Limited, we've been around for a while. and we're not going anywhere. We're growing and growing and growing. We actually sell our software in 40 different countries now. Now, this is what Tom wrote. It says, volume spread analysis. Learn to trade like a professional. The product at this time was called VSA 5 Professional, but it's now called Trade Guider, which is our brand. VSA 5 Professional is real-time and end-of-day expert trading system producing automatic signals of surprising accuracy. This is not a black box system, but based on sound and well-tested theories first put forward by Richard Wyckoff in 1932 on how to read and trade the tape. In fact, it was put forward before 1932. In fact, it goes back to 1906. Suitable for trading individual stocks, options, futures, or commodities, and now I'll even say cryptocurrencies, which I'm going to show you today, and foreign exchange, if you want to look at that. Currency futures is what I trade. The Wyckoff Method is endorsed and taught at the Golden Gate University of San Francisco. It's recommended learning by the Society of Technical Analysis of San Francisco and by Stocks and Commodities, the world's leading technical analysis magazine. The indicators, as I prefer to call them, he says signals, are based on supply and demand volume and the activities of the main or the big players on the other side of the trade. The quality and the accuracy of these signals, without doubt, proves that the theories are not flawed. And it's the next major step forward in market analysis. Keep in mind, this is 30 odd years old. And he says, this is Tom wrote this, you will know why a signal has appeared. You will know why there's likely to be a turn in the market. You will know what is going on in the market. You will soon realize there are no secrets. There are no magical formulas in the stock market, as Tom was used to refer to. We know this because some of the finest brains in the world have been looking and searching carefully over the years. However, all markets do move on supply and demand. While professional traders are taking opportunities wherever possible, as we saw today, to catch stops, mislead you, take you out of a good trade, or get you into a poor one to better their own accounts. Unfortunately, this is how the markets work and always will do. But the most striking information will probably be the realization all the information you see, read, or hear about the markets is extremely misleading, usually resulting in the market moving in exactly the opposite direction of the way you think it should be going. VSA 5, as it was called then, now Trade Guider, will remove this confusion. And there's a picture of Tom's book on the back there. So Tom, that is really sums up in that little brochure there what this is all about. We are not interested. Don't get me wrong. There's certain technical analysis tools that I definitely use. I use Fibonacci retracements. I use Kagi charts. I use point and figure charts to back up what I'm doing. And many of our customers use candlestick patterns. And indeed, they've told me that they've learned technical analysis, but find that volume spread analysis gives them added confirmation as to whether they're going to take the trade or not. And that's really what this is all about.
Awesome. Yeah, I'm a big believer in having reinforcing information, let's say, not sticking to one chart, what type, one study, one, you want to have, like maybe we mentioned before, different quivers, arrows in our quiver. And when they align, it's a beautiful thing.
It is. And when I first wrote my book back in 2000, well, it's published 2012, the word market manipulation was hardly ever used. And one morning I woke up, and I know because Tom had told me exactly. In fact, if you go to volumespreadanalysis.com, he'll tell you how they do it. He says, we put out rumors, we put out stories, because if we're wanting to sell a stock and we bought it low, we have to get everyone to buy it from us on the way up, which is why we say when weakness appears, it happens on up moves, not down moves. This is completely opposite of what people are taught. The market's going down, it's weak. Often, as you saw today, it's not. It is now become weak because they marked it up and then slammed it down. But look at the headline. This is the BBC, which is a major broadcaster here in the UK. And this goes back to 2015. And there it is. The market is rigged. Michael Lewis. then a few days later, or a few weeks later, we had the LIBOR scandal with the big banks moving the interest rates. And then we had the gold price manipulation. All of these are public knowledge. I'm not making any of this up. Why is it relevant to the retail trader? Or indeed, even if you're a fund manager? Because when the move happens, like with the flash crash, which was also in 2010, if you see that move happens, it leaves a giant footprint in the volume. And this is going to set the scene, what I'm going to show you today, for the next week. Not just for today. I mean, in fact, today I've finished trading, but for tomorrow, very busy day. For the next day, even busier. Thursday is going to be another big move. We're certain of that. And we run a live trading room, at which I trade with NinjaTrader there, and I'll show you this. You can all come and see the live trading room. And basically, we trade based on this method, volume spread analysis. And it's very, very straightforward. Over to you.
So when you say, Gavin, real quick, when we're looking forward, and thank you for bringing up the chart. That's great. You say you're looking for a big move on Thursday. Is it based on what's happening today? What happened last week? Are you looking at the volume that's leading up to it, or are you factoring? We've got another report tomorrow. We've got a PPI report in the morning. We've got other reports coming out. You've got in England, you've got I believe you have CPI and PPI as well coming out. Are you looking at the reports and saying, boy, we're going to have a repeat of today? Maybe not in direction. I can't say a repeat, but exactly what's going to happen is going to happen the same way. But there will be some sort of activity based on these reports, or is it something that you're just purely looking at the volume and you're kind of ignoring those reports?
No, I never ignore reports. I don't follow the news. I don't believe the news. So I don't. If I hear a stock's a really good buy, I look to sell it. If I see a stock that's a really, really good, you see this all the time. I mean, I could show multiple charts. We haven't got time, but this is a good example. Crude oil has been in the news, right? And it's everyone's. I mean, even friends of mine say crude oil's going through the roof. It's going up to 150. And I said, no, crude oil's been going down, right? But it's just got bought back at 82. And they say, how did you tell me? What do you mean it got bought back? I said, they bought it back, but now this morning they're selling it again. And I mean, even my mentorship students say, that can't be right. And I show them, I say, look at this chart. Where's the elephant in the room on that chart? Well, you can't miss it. If it's there and it's got a green indicator, but would I buy there? Absolutely not. It's in a downtrend. And this is all plugged into the NinjaTrader platform. I'm using the latest version of NinjaTrader, the 64-bit, and everything that you're seeing on this screen is the proprietary Trade Guider Smart Center Pro. So I use the professional technology, Smart Center Pro, but we also have a base version called Smart Center because they're differently priced. But this is what we call the start of accumulation. Okay, so they did definitely buy crude oil down here. And we can see, I've marked a few of my trigger lines. I've got other lines that I often mark on here, but every indicator, you're going to notice lots of red and green indicators in this system. They're not buy and sell signals. Do not treat them as such. There is a trading plan, the one I use today. It's a written plan, which I will give you access to, and it's a rules-based plan. It says the first part of a trade setup to the long side, just like with BP, is massive volume. And I always used to, I've explained it in Trading in the Shadow of the Smart Money. Tom would always say to me, right, Gavin, I said, what do you mean relative volume compared to the previous bars? He said, well, Gavin, imagine you're going down Michigan Avenue, because I was in Chicago at the time, and it's the middle of the night and an alien lands next to you. You've never met a human being. And he says, Gavin, how tall are you? And I said, I'm 6'2". Hasn't got a clue because he's got nothing to compare it to. But funnily enough, just at that time, Yao Ming, the basketball player, comes running down Michigan Avenue, bouncing his ball. He's 7'6", right? Used to play for the Astros, right, Tom? I think it is, or the Rockets, the Astros, I think.
I think, yeah, one of those, yeah.
Yeah. And he stands next to me. Okay. And then my daughter happens to be coming down the other side of the road, and she was 3 foot at the time. So I said, look, compared to me, my daughter's low, small, and he nods and puts up and says, yes. And Yao Ming is enormous. So there's my daughter Olivia on this down move here, and there's Yao Ming, and I'm probably there. So there's your comparison. Everything's relative. VSA uses relative volume, going back a number of bars, which is proprietary. I can't discuss that. But then I did say this is an educational tool as well as a trading tool, and the rules are very clear. Once you start here to see what we call accumulation, you can highlight the dialog box. These were written 35 years ago by the late Tom Williams. They were improved upon by Philip Friston, who's also an author, very good friend of mine, who is a retired fund manager from the UK. And it's very interesting because this is another book I'm going to recommend to you by the late David Weiss, and it's called Trades About to Happen. I've actually endorsed it on the back, as you'll see. And Trades About to Happen is all about exactly that, about to happen. The start of a trade setup starts with the gorilla in the room, the elephant. And then we wait for what David describes in his book here as a change in behavior, just like a human being. This human being hasn't changed behavior. It's a negative mood, negative mood, negative mood, negative mood, red, red, red. Everything in our system is saying, definitely don't buy yet. But then from that point forward, everything changes to positive. And this is all proprietary. I haven't got time to explain it. But if you come into the live trading room, either tomorrow or Thursday, I will explain it. And I'll explain it using this exact chart because I'll be trading it. Now, what happens here is when the market has a widespread down like this, I then look, and this is a 60-minute chart, for the thrust, and we call it the narrowing. I'm sorry, I'm quoting from David's book, the narrowing of the thrust. And then we see no supply. So what is supply and demand, okay, is exactly what drives the market. But so, ironically, there's no supply and no demand. And the market now does change behavior. And each indicator that we click on will tell us why. The shakeout. That's exactly what we saw on the monthly chart of BP, but this is a 60-minute futures chart of crude. And then finally, we get our opportunity to start looking for longs. No supply again. We can repeat it up here. No supply test. And then right at the top of the bar, which is why we've come back down to it, we have another very strong sign of strength. And what I'll do here is just show you, it's very difficult to, I'm going to try and move that. Yeah, let me just move these for the moment. And this is buying. And it says sign of strength. Every indicator has a number. And they're all based on different codes. There's about 330 different indicators. But notice they don't appear on every bar. But that was in the right place because it was everything in the system is green at that point. The diamonds, which we call our short-term trending system, is green. It shows the proof that when strength appears, remember this, it appears on down bars. Now, prior to the big move today, we had our second strongest indication that was about to be sellers appearing. And it's called a buying climax, and it happens on an up move. So strength appears on down bars, and that's a price bar that's closed lower than the previous close. Remember that. Weakness, when it appears, happens like this on an up bar, a price bar that's closed higher than the close of the previous bar. And hence, we see a massive decline on the news. But this area here is where the market's very likely to come down to around 86. And then I'm going to be looking for testing that to pull back into that area on very, very low volume. Now, I will come to a chart of Bitcoin in a minute because I know NinjaTrader now do the micro Bitcoin. And this is a really good way to learn. If you're looking at cryptos, one of my students today is actually trading on the micros. And he thinks the VSA, he said to me, the VSA indicators in NinjaTrader for Bitcoin are uncannily accurate. I didn't know what he meant by that because they're all, you can see them here. So if you want me to, Tom, whenever, if you've got any questions, shoot away.
Yeah.
But I can show a Bitcoin chart if we need to.
Yeah, before we hit to Bitcoin, though, I do want to talk about something there, which I think is interesting, and I want to explore just a little bit, which is, you mentioned supply and demand, and as there's when supply runs out, when demand runs out, are you looking at volume to tell you? Is it more of, in this chart, I see a couple areas where, like on, between the 9th and the 12th, there's that retracement below or back to your diamond, your green diamond line,
Just
right? Yeah, that
Yep.
one, and then the next one.
Yep.
Those look to be where supply is diminished, right? And correct me if I'm wrong, but it's all, is it a combination of finding a level or a support level at an area where there's low volume? Is that kind of what I'm thinking?
You're very close. Basically, everything starts with high volume. Okay, so it's like the elephant walking across a garden. If it walks, it's going to leave a footprint, unless you've got a concrete garden. But even then, it might leave a footprint if it's a big enough elephant. So once it's left the footprint, as it's done here, as it's done today, as we'll go and have a quick look at some of the currency futures if we've got time. What we look for then is in the future is what we call confirmation bars. And this is, I'm not going to have time to go through my whole trading plan, but it is
Sure.
The actual plan. I use something today to trade called Super Scalper, which uses a 1, 2, 3, 4, 5 minute chart. That's it. I don't carry positions overnight anyway, very rarely. We do in our asset management division because we do position trade. But I don't like to have sleepless nights. You can make money during the trading day. You can also lose money during the trading day. But the Super Scalper method is ideal for futures. It's ideal for Bitcoin, especially the micro. And I can I'll show you it at the end if we've got time, but we'll see if we've got time. But here, there's a high volume. Okay. I wait for the market to try to go above or near into the middle of the bar. And then I look at the market retracing into it to see what it tells me. Now here, it tells me there's no supply. There's no selling pressure there. Right. The sellers are not there. If they were there, the volume would increase and we'd fall. And then on the 2 bars later, we get another bar, a test. And this is what causes the market to rally. But what's interesting today is what happened here on my line. The volume here now is high. Now, that sounds like a contradiction in terms, So you've got low volume on a pullback, and then you've got high volume on a pullback, but they both do the same thing. Of course they do. But then you talked about the other side of it. What happens if the market shows weakness, supply coming in, and then goes up into that area? There's your no demand bar. Right. There's no volume on it. There's no interest in it because it falls. This is so logical. As Tom said in his book, this is a proven method. It's nothing new. It's just that most people don't know about it. That's the thing. Well, they do now because we've got thousands and thousands of customers around the world. But it's very interesting. What I like about the NinjaTrader platform is the cleanliness of the charts. And what I haven't shown you yet, but I will, is we have a system. It's a scanner. And it gives me the trade alerts when these things appear ready to trade. So it's scanning all of these instruments. And you can see today, everything was short. Okay. So if I take gold, right, which has just given me an alert actually recently, we can see all of these are our time frames. This is using something called sharpshooter, which is a bigger time frame. So this is suitable for swing trading. The 1 minute has just come up with no demand. The 5 minute is negative. All of these are proprietary. Okay, they're proprietary to TradeGuider. The 15 minutes the same. The 30, the 60. So would you want to be long in that? No. No. And look at the 6C. Just had an up thrust. Now, I'm not going to explain all this. We don't have time. We've only got 10 minutes. But it tells us, if you read the dialog box, the bar is marked up, but falls off rapidly to close on or near its low, normally with an average to wide price spread. The upthrust is a money-making maneuver by the market makers to catch stops of those who are short and trap the unwary into buying. Prices are marked up at the open, often on good news. High volume shows selling by the professionals, while low volume shows the lack of interest in the upside. And that explains it, Tom. It's in there. Now, for those of people who are new to this, if you get a copy of Trading in the Shadow of the Smart Money, you want the printed copy, it's on amazon.co.uk and amazon.com. It's all colored charts. All of this that I'm showing you here, all the principles are explained. And interestingly enough here, British pound, another one that I've shorted today. Look, and what happened here on the 4-hour chart earlier on, the trap. Now, I'll briefly show you this before I go to the coin. So if we have a look at, well, the euro was a good one as well, actually, but the pound, they all look pretty similar. But now look at this. This is the British pound, okay? This is a 4-hour chart. Now, we come up and then we get the move, the trap. And it says this indicator is based on the action of 2 bars, which it is. The first bar is marked up. They slam it down and it continues to go. So how do you trade it? Well, you just change the time frames in NinjaTrader. You say, well, and this I love. This is so easy. I want to put a 15-minute chart up. And I want to see, is there an indicator confirming what I call in my book, the gotcha bar? Of course there is. The upthrust that we just talked about. And that's why price is falling. And everything is red in the system. These are all proprietary. I don't have time to explain them. But it shows us there are times in the market each week where these type of moves happen. So I'm patient. You are paid to be patient in these markets. You will get setups and you will get opportunities. The other thing that this system does, it shows you when the market's in congestion and you can't trade it. And all of these things in Smart Center Pro that I'm using here, all of these will actually go to a different color. I'll show you it in a minute, but basically they go gray, green and red. And we call that the Christmas tree effect. And you don't want to be trading when it's doing that. So back over to you, Tom.
Yeah, no, this is great. Thanks for pulling up that chart of the British pound. You know, I'd love to see the Bitcoin chart. And before we go on with the Smart Center Pro, you know, this kind of fractal analysis, being able to drill down and get confirmation signals at multiple time frames. You know, again, another way to reinforce your bias, right? And it's not your bias; it's the market telling you what's happening. Based on price, based on volume. But I love the idea that, you know, when you're looking at, let's say, gold or British pound or what did we see earlier? Maybe it was the euro, all lining up on the different time frames, right? The 1 minute, the 5 minute, the 10 minute, and all giving you similar indications. That's, you know, I really like the way that you've organized this, so it's easy to read, easy to see.
Well, I've got to give credit to our chief technology officer, actually, because I didn't do it. My idea. I want to put a word out for Grigory Margolin. And again, we've got a guy that runs the live trading room as well, Dr. Aram Kiani. And I taught him from scratch. He was a doctor. He's a medical doctor. He didn't, and he's now retired and he's trading live full time, 4 days a week. Yeah,
that's great.
It can be done. So look, I know I'm conscious of time. I'll just quickly put a Bitcoin chart up for everybody. And we can see here the main one. There is a mini Bitcoin. Now, again here, what I noticed was that Bitcoin was heading up. This is the 60-minute chart to around 23,000, but it did exactly what everything else did. And the indicator right behind it was what we call upthrust at market top. And it was preceded by the hidden upthrust. Now, those two indicators together within 10 bars are alert that actually, because they happen at the top of a trend, when you get an uptrend and that happens, it's very, very likely that the market will have a decline. And if I show you the bigger, now I'll go out a time frame and then come back in. So again, in Smart Center Pro, it showed and Smart Center, the other product that we have, it showed a similar thing. But what we notice about all of these charts today was, you know, they were marked up and then immediately slammed down. Now, if you want to know what the setup I'm looking for is, it's going to be more obvious actually on the 15-minute chart, which is my favorite, one of my favorite trading charts, because I've got what we call a 3-bar setup that happens, and it's written about the same setup as in my second book called The Complete Volume Spread Analysis System Explained. And it talks about exactly this. It's what we call distribution. And the first bar is what we call the buying climax, okay? It's an increase in volume. The spread narrows, but it closes near the low with the next bar closing down. We read, it tells us this, okay? So you're learning to read a chart as well as getting the indicator, but we wouldn't short there. Okay, we wouldn't short there. We get an alert here, but it's still in an uptrend. But now it's changed. So drop a time frame now, and we're going to see what this looks like on a 5-minute time frame. And I'll tell you the other one that's interesting was the Japanese yen today. But we can see right at the top here, this is what we call a trap up move. And this is a serious sign of weaknesses, which is why Bitcoin fell from, well, when it closed, it was at 22 approximately, just under 22, and it's now at 21,470. But we have a scanner that's built into this system, into Smart Center Pro. And this is the bit, Tom, I don't think even you're aware of. And what it does is it sends a signal or an email alert to my phone. Okay, there's some coming in here. And this means that even when I'm not buying I'm making a cup of tea or something, I get an alert. And when that alert comes in, and sometimes when I'm by my screen here, you may have heard some noises in the background. I've got various ones that come in because in NinjaTrader, you can do that. In Smart Center Pro, you can be specific about exactly what indicators you want to see and then get the alert through the scanner. So it's quite clever.
That's great.
Yeah. And again, what I like about the NinjaTrader platform is you can see it's very clean, very easy to read. I previously used Infinity AT charts, which I don't know if they're still available, but I moved over to NinjaTrader when, well, what was it? Quite a while ago now. And I had to get used to the platform again. That's obviously something that can be quite difficult. But what I did find was the educational stuff on the NinjaTrader website was absolutely brilliant. And all they needed to find was someone who's really good at education, head of education, someone like Gavin Holmes. No. Jim
Yeah.
Jim
Well, Jim, Jim, certainly Mark, our Jim and I report to Mark, who's the overall head and has been doing great things and trying to advance the educational effort at NinjaTrader, and he's doing a great job as far as I'm concerned. That's great to hear. It's again, I've had a lot of experience. I'm sure you have with your 22 years looking at different platforms, and I'm just loving NinjaTrader platform for not only just charting but for trading, right? And that's why we're here. We're here to look at the trading. I do want to be cognizant of time. We have a couple minutes left. And what are we looking at now? We're looking at Japanese yen.
Yeah. Same. They all look the same, Tom. They all look the same.
Yeah.
You've got a double top here that's identified in VSA. You see this indicator a lot. It says supply coming in. It's a narrow spread bar closing in the middle. Next bar closes lower. Remember I said about the 3 universal laws, cause and effect and effort versus result are 2. That's effort. As the volume increases, the result is the closing in the middle, the next bar's down. That has to be sellers already starting. And then it gets confirmed in there on this upthrust, which we've seen multiple upthrusts today. By the way, the best place to trade that type of indicator, though, is not at the tops. It's when the market is starting to trend down. And if this market breaks into this bar tomorrow and I see an upthrust, I'm immediately short. I'm not going to hesitate because it's weak. It's in a downtrend.
Right. Well, thank you. That's great. And yeah, I noticed coming in this morning, everything was green on my market analyzer. I mean, literally everything was green, all markets, all asset classes. And then of course we saw after 8:30 Eastern time, just everything except, a couple of markets. I think natural gas is still positive, but everything resembled kind of the same, 8:30 bar. Now, what's happened since then have been a little bit different between different asset classes, but for sure the currencies and the index futures look very similar, today.
Absolutely, 100%. And as I said earlier, if you want to get the book, I know I've just had an email from someone. It's very straightforward. You basically go to volumespreadanalysis.com, or you can go to the TradeGuider site, which is tradeguider.com, and it says Resource Center. And if you've got any questions about Smart Center Pro or anything like that, Mary is available. She's obviously she gets a lot of live chats, but she'll happily help you. And again, if you go to the NinjaTrader site as well, there's loads of educational materials on there. I'm sure you're all aware of that if you're on their database. There, see that's a trade alert right there. It's just come through on the phone. Let me just see. I'll just see what it's on. Time, but British pound. Yeah, I thought that would happen.
We were just saying.
Yeah, click on the Resource Center button. And then if you want to find out about the trading room, it's very straightforward because I will be using NinjaTrader in it tomorrow. You just go to tradeguider.com and it gives you 2 different options there because we've got a new website that we launched today, funny enough, called Trade to Win. But this here is the Trade Guider site. And you just basically put your details in here and then you'll get, well, there's loads of stuff that again, there's videos, there's the books. Both books are available, and the last live trading webinar that we did and the recording of it, which actually, if you want to look at it, it's at youtube.com/trade guider. It's very simple, and you can see the one that I did yesterday. Brilliant. Well, Tom, I think we ran out of time. Thank you to you, and Mark, and everyone, and Jason at NinjaTrader. I think you do a fantastic job at supporting your customers, which is why I'm always willing to give my time freely, and look forward maybe next time to doing some live trading in one of these events. So if we get some time to do it, or do it, because obviously you can't do it in 45 minutes because you probably won't get a trade. But if we could, we could talk to Jim about doing something. But I'd love to do that with you. And once I've got I'm funding the account's funded. I've just got to add some more money into there, but I'll do that.
Oh, great. No, Gavin, it's our pleasure to have you on, and thank you for your time, especially during these crazy times, especially where you are. Thank you again for taking the time and educating us. And if anybody's viewing this wants to learn more about what Gavin's doing, of course, the tradeguider.com website is probably the best place to go. Gavin, I hope you see more people coming in. Really, interesting discussion today, and what a great day to talk about it. Maybe not great for some of the people out there, but great example of what's happening. And I look forward to our next discussion, whether it's on Traders Workshop or maybe we can do something different. Jim and I have talked with Mark and Jason about doing some broadening our offerings. So maybe there's something there we can do. But again, want to thank everybody viewing for taking the time and watching us, and hope you learned something. Feel free to hit the like button on YouTube and follow us on Twitter, NinjaTrader. But in the meantime, we'll do this again next week. We have another guest next week, and feel free to join us at Bars Closing. Jim will be hosting today. With that being said, I want to wish everybody a great trading day.